Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about some positive news recently released regarding Tesla stock. So in this video today, it's basically all going to be about this most recent Q3 earnings report released on October 21st. So in this video, I just want to break down a few key points from that report and just some information that I find valuable that I thought I would share with you all. So as always, please make sure to smash that like button if you enjoy the Tesla videos. And I don't know about you all, but I was pretty excited about this most recent earnings report, and I was expecting them to beat analyst expectations, which they did. So that's always another good thing as well. And even the stock went upwards in the after hours today, in which we got around like a 3.39% surge in total. So just to address the current share price, we are at a value of $436.25. And in the normal market hours, we had a plus 0.17% gain, which is plus 70 cents. And then in the after hours, we had a plus 3.22% gain, which is plus $13.61. So like I said, I'm really excited about this most recent earnings report, and we had a lot of good pieces of information revealed, in addition to some interesting responses from Elon Musk to some of the investor questions. So a lot to talk about with today's video. First off, let's just open up this free stock that we got from someone using my referral link. So big shout out to Loic for using my referral link. I hope I'm saying that correctly, but I greatly appreciate you using my referral link. And let's see what we get right here. Come on. For some reason it wouldn't show up, but we got WPX Energy, around a $5 stock almost. So as I said, I greatly appreciate that, Loic. If you're watching, big shout out to you. But anyways, let's just go ahead and check out this official earnings report for Q3 of 2020 for Tesla, and then I'll expand on this information a little bit further. I almost forgot, before we get into that, let's just address the analyst expectations in comparison to the actual results. So as it says with this article right here, Tesla blows away estimates as deliveries ramp up, targeting 500,000 by year's end amid the Rona. And so right here with a Q3 revenue, it says $8.77 billion versus $8.26 billion expected. And then the Q3 adjusted earnings per share, which was 76 cents versus 55 cents expected. So with that, we had analyst expectations being beaten. And as you can see from this chart right here, Q3 in comparison to Q1 and Q2 expectations, it was a little bit closer together, but overall, Tesla investors still caught a dub, and we got a lot of awesome news today, so I'm excited. So starting off with this Q3 earnings report, with this official document, we have the highlights. So just addressing some of the key points right off the bat, it says for the cash section, $5.9 billion increase in our cash and cash equivalents in Q3 to $14.5 billion. So with $14.5 billion in cash right now, Tesla is sitting pretty. I have to say, it feels good to know that they have a lot of cash on the sidelines if they need to undergo some sort of expense to expand their business, whether it's the acquisition of new land and the construction of a new Gigafactory, or a research and development center, or just simply some other addition to the company. It's just nice to know that that option is there. And then it says free cash flow of $1.4 billion in Q3. And then for the profitability, it says $809 million in operating income, 9.2% operating margin in Q3, $331 million GAAP net income, $874 million non-GAAP net income. And then it says stock-based compensation expense increased to $543 million, driven by 2018 CEO award milestones. And then over here for the operations section, it says record vehicle deliveries, profitability, and free cash flow. Build out of 3 new factories on 3 continents continues as planned, and first step of FSD beta rollout in October of 2020, which as we know just now happened recently with a beta test rollout. And so for the summary, it says the third quarter of 2020 was a record quarter on many levels. Over the past 4 quarters, we generated over $1.9 billion of free cash flow while spending $2.4 billion on new production capacity, service centers, supercharging locations, and other capital investments. We are increasingly focused on our next phase of growth. Our most recent capacity expansion investments are now stabilizing, with Model 3 in Shanghai achieving its design production rate, and Model Y in Fremont expected to reach capacity level production soon. During this next phase, we are implementing more ambitious architectural changes to our products and factories to improve manufacturing cost and efficiency. We are also expanding our scope of manufacturing to include additional levels of insourcing. At Tesla Battery Day, we announced our plans to manufacture battery cells in-house to aid our rapid expansion plan. We believe our new 4680 cells are an important step forward to reduce cost and improve capital efficiency while improving performance. We continue to see growing interest in our cars, storage, and solar products, and remain focused on cost efficiency while growing capacity as quickly as possible. So from this summary, as an investor, something that I really love to see here is this huge emphasis on how they're going to try to continue with this innovation with manufacturing. And then as it states right here, they remain focused on cost efficiency while also growing capacity as quickly as possible. And then there's the emphasis on vertical integration as well, with talking about how they're going to be building their own 4680 cells. So a lot of things that I love to see here as an investor. For one thing, all of these statistics are great as well, but in terms of just the general concept and this long-term perspective that I have, I love to see vertical integration. I love to see a huge focus on efficiency. As you all know, I've really emphasized efficiency throughout many of my videos in the past, and also how Tesla's just this one big optimization machine. So I love the fact that they're focused on cost efficiency, and as it says, while growing capacity as quickly as possible. And that is very huge for a company early in its growth stages. You want this rapid expansion to happen at a level that is still controllable. So just with this section so far, I'm very impressed, and I'm really satisfied with their mindset with the company right now, as I said, with cost efficiency, vertical integration, and simply trying to grow capacity as fast as possible. And in this one right here, we have the financial summary. I'll leave this all linked down in the description below for you all to check out for yourself, or you can just pause the video right here as well. But just a few things to take note of. We have automotive gross profit, and quarter over quarter that is up 60%, year over year it's up 72%. We have an increase in automotive gross margin, and then for the total revenues, we're up 45% quarter over quarter and 39% year over year. Quarter over quarter for total gross profit, we are up 63%, and then for gross profit year over year, we are up 73%. And then down here, as you can see, Tesla is at $1.4 billion in free cash flow for quarter 3, and that is a 234% increase quarter over quarter and a 276% increase year over year. Another key point of this breaks down the financial summary with the revenue, in which it states total revenue grew 39% year over year in Q3. This was achieved mainly through substantial growth in vehicle deliveries as well as growth in other parts of the business. At the same time, vehicle average selling price declined slightly compared to the same period last year, as our product mix continues to shift from Model S and Model X to the more affordable Model 3 and Model Y. For profitability, it says our operating income improved in Q3 to a record level of $809 million, resulting in a 9.2% operating margin. This profit level was reached while we took increased SBC expense in Q3 attributable to the 2018 CEO award, of which $290 million was triggered by a significant increase in share price and market cap in a new operational milestone becoming profitable. Positive profit impacts included strong volume, better fixed cost absorption, and continuous cost reduction. For the cash section, it says quarter-end cash and cash equivalents increased by $5.9 billion quarter over quarter to $14.5 billion, driven mainly by our recent capital raise of $5 billion combined with free cash flow of $1.4 billion and partially offset by reduced use of working capital credit lines. Then it says since our days payable outstanding are higher than days sales outstanding, revenue growth results in additional cash generation from working capital. DPO and DSO both declined sequentially in Q3. And here's a really interesting chart as well with the operational summary. So just looking at the production number, we have 145,036. These numbers have been addressed before. However, we have seen an increase with the total deliveries, in which it is currently at 139,593. So with that report on deliveries, there said there might be a variance in the actual amount because of certain details. But as you can see, this was originally 139,300, I believe, and this has now been increased to this number. But getting into some of the more important information that we haven't seen before in terms of solar deployment, it says 111% quarter over quarter, and that is 33% year over year. And then for storage deployed, we have 81% quarter over quarter and 59% year over year. And then we had slight increases for quarter over quarter and year over year for store and service locations, mobile service fleet, supercharger stations, and supercharger connectors. And I really like to see this expansion with the superchargers because I think that's huge in terms of Tesla's infrastructure. I think that's a big convincing factor for those that will likely be looking to buy an EV in the future. They want that infrastructure and that Tesla ecosystem to be there when they transition to a new style of vehicle. And in this section, it talks about the core technology, and so there's a section on autopilot and full stop driving, and it says our autopilot team has been focused on a fundamental architectural rewrite of our neural networks and control algorithms. This rewrite will allow the remaining driving features to be released. In October, we sent the first FSD software update enabled by the rewrite to a limited number of early access program users, city streets. As we continue to collect data over time, the system will become more robust. And you all can read this section for yourselves, that basically just talks about some of the new vehicle software. And then right here, it talks about the batteries and battery day. But one point that it seems to highlight here by putting it in bold, it states, additionally, due to a simpler cell manufacturing process, we believe CapEx per gigawatt hour of battery capacity should decline by 69% compared to today's production process. Then in this section, it talks about the energy business, in which it says total solar deployments more than doubled in Q3 to 57 megawatts compared to the prior quarter. And in terms of future improvements, it says for solar roof, installation time is a key area of focus to accelerate the growth of this program. And it says we continue to onboard hundreds of electricians and roofers to grow this business. So I like this as well. I really think the solar business and the energy side of Tesla is going to be tremendous in the future. And even billionaire Chamath Palihapitiya has emphasized this side of Tesla's business as having a lot of potential. Another really important page that I accidentally skipped was this one about the vehicle capacity. So this says for Fremont, we have recently increased capacity of Model 3/Model Y to 500,000 units a year. In order to do this, we restarted our second paint shop, installed the largest die casting machine in the world, and upgraded our Model Y general assembly line. Production should reach full capacity towards the end of this year or beginning of next year. And then for Shanghai, it says Model 3 production capacity has increased to 250,000 units a year. We reduced the price of the Model 3, making it the lowest premium mid-size sedan in China. This was enabled by lower cost batteries and an increased level of local procurement. As a result of this shift in cost and starting price, we have recently added a third production shift to our Model 3 factory. And then it says for Berlin-Brandenburg, construction of the Gigafactory in Berlin continues to progress rapidly. Buildings are under construction and equipment move-in will start over the coming weeks. At the same time, the Giga Berlin team continues to grow. Production is expected to start in 2021. So a lot of really valuable, concise information about each individual Gigafactory. I love the fact that we're getting some context and insight as to the possibilities of what this could look like in terms of production numbers once everything is fully completed. So that's pretty exciting. And then as it says right here, we have the different annual capacities for each different model at each different factory. So in Fremont, Model S and Model X, 90,000, Model 3, Model Y, 500,000. And then in Shanghai, Model 3 is 250,000, as it says over on the side here. However, it makes sure to note that installed capacity does not equal current production rate. It says production rate depends on pace of factory ramp, supply chain ramp, downtime related to factory upgrades, national holidays, and other factors. So keep in mind, just because this says the capacity doesn't mean they're always running at max capacity and producing the maximum amount that they can. That's just not the case with this, because that would be like the perfect ideal scenario. However, this still provides a little bit of context out of some of the possibilities we could see in the future with this. And I know this video is dragging on, so I just want to emphasize these last couple of points, but this page is especially important. So this is the outlook page, and it says for volume, we have the capacity installed to produce and deliver 500,000 vehicles this year. While achieving this goal has become more difficult, delivering 500,000 vehicles in 2020 remains our target. Achieving this target depends primarily on quarter-over-quarter increases in Model Y and Shanghai production, as well as further improvements in logistics and delivery efficiency at higher volume levels. So they're still standing by this 500,000 vehicle target for deliveries this year. And then for cash flow, it says we should have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. So that's great. And then for profit, it says for the trailing 12 months, we achieved an operating margin of 6.3%. We expect our operating margin will continue to grow over time, ultimately reaching industry-leading levels with capacity expansion and localization plans underway. And then finally, for the product section, it says we are currently building Model Y capacity at Gigafactory Shanghai, Gigafactory Berlin, and Gigafactory Texas, and remain on track to start deliveries from each location in 2021. Tesla Semi deliveries will also begin in 2021. We continue to significantly invest in our product roadmap. Right here, we have a few different charts ranging from vehicle deliveries, operating cash flow, free cash flow, and net income. So feel free to pause this video here. But as you can see, the trend continues across the board, with this most recent quarter just dominating. Here's another image of these charts that you all can feel free to pause for yourself. And there's many other financial statistics that you all can check out for this on Tesla. But there was one piece of information that I found very impressive, and I just feel like I have to share it with you all, which is the Q3 automotive gross margin excluding regulatory credits, and that is 23.7% for this most recent quarter. And if you compare that to the previous quarter, it was 18.7%. So this is a very impressive gross margin. Keep in mind that to have achieved this, Tesla is really continuing to innovate with their manufacturing in terms of cost efficiency, trying to save costs when they can, while also still making sure it's a quality product. And then, like I said, with manufacturing, just trying to find more efficient ways and again, as we know, Elon Musk has stated, the best part is no part. So it's all about being efficient, saving time. And so when we hear Elon Musk emphasize that they want to be the best manufacturers, this is just one of those benefits of that goal. If they can continue improving with manufacturing, then it's likely that we're only going to see those gross margins get better and better and better as we start to see more engineering innovation and just improvement with the production lines and manufacturing overall. So that's really exciting, and I just wanted to emphasize that as the last major key point of this video. But anyways, this one drug on a little bit, but I just didn't want to miss out on some of the major points. I still missed a few things, but I just didn't want to turn this video into like a 30-40 minute long video. So anyways, please make sure to smash that like button if you enjoyed it, and also feel free to use my referral links to Robinhood and Webull in the description below. If you sign up with my link, you'll get some free stocks, and especially with Webull right now, you can get 2 free stocks valued up to $1,600, and to get that, all you have to do is sign up with my referral link and deposit $100 into your account. You can take that $100 right back out after you get your free stocks, so it's basically just nice passive income with a minimal effort. But anyways, hope you all enjoyed this video, and I hope you have a fantastic rest of your week.